Hey guys, it's Willie from Suerte Welcome back. So today I wanted to share some of my preliminary findings because I'm trying to kind of plan out in advance if it's possible to retire just on options trading, or how like options trading can fit in my potential. I guess like a pre-retirement. It's not like a full retirement where I could just like lie on a beach all day, or like play some golf, or like kind of like what people think of like as a traditional retirement. I plan, I guess, like when things get better, like I would like to maybe start um increasing my level of travel, but at the same time I need to kind of fund those travels like somehow. And I think like options trading will be a good chunk of that. The reason I bring this up is because I was going through like some of the old like Tasty Trade material that I've downloaded previously. For those of you that don't know, Tasty Trade is a great resource for just like options research in general. But recently they've updated their site, so like I think they have like a time limit on some of their like material. So I guess like every so often, like they kind of refresh the research, which is, I think, is a very good idea. But sometimes like they'll, I guess like some of the older stuff is just like not there anymore. So I'm kind of hoping to see, I guess like at some time in the future they'll update the research on like the, I guess like the recent down move and like the volatility. Even though like there was like a, I guess like a rotation in stocks from, I guess like more tech oriented names to more, I guess like so-called, I guess like recovery stocks, or more like the more traditional stocks. So it was a weird combination of like contracting volatility, but certain stocks were also going down. So it was like a big like double whammy for those of us that had long options. But thankfully I had like some short options to kind of offset some of the either like the reduction in profit, or like maybe like some of you also like were experiencing some losses. So that's why you should never I guess like go all in any one particular style. I think you still need like a little bit of diversification. Like even if you just like decide to do options trading like full time, and it's a very hard profession to be in, because like right now, like recently, like I'm having trouble finding like good like trades where like a year ago, like around like after like March 2020, there was like so much opportunity. Like you could short puts on like a lot of stocks, and like within like days or weeks, like you just like, collect like so much premium. And now it's like, now it's kind of like the opposite, where it's like a lot of things have kind of like dried up. It's like I don't feel comfortable shorting puts to buy stocks like at this level. And recently there was like that whole like the Archegos, like that the guy, he the manager of Bill Wang, like he, like, it kind of sucks for him. Like he had so much money, and then he just blew it because of too much leverage. And I'm kind of like trying to be mindful of that as well, because like that could easily happen to me, as like if I'm not like careful with the amount of leverage that I'm using. So I know like some of you like the portfolio margin stuff, but like be careful with that, especially when like stocks are like at pretty much like all-time highs for certain stocks. And then also like the broad participation is starting to get a little iffy. Like some of the former names that were like high flying, like they're starting to kind of stall out. But it's a little tricky right now. I wouldn't be surprised if we had like another like 20% or more, like another down move. But it really depends on what kind of stocks you have. So just for myself, like I'm starting to rotate a little bit more into like dividend paying stocks, rather than like some of the tech stocks that I liked. Like I still feel bad about Neo. Like I mean, it's not like they're back at like $6 or whatever, but it's still like when you're at 60 and then and then you went down to like almost 30 and now they're starting to crawl back towards 40. It's tough. And like the volatility wasn't as good as it was before, so it's also like a double whammy. And then also like if you just happen to have some long calls, it's like seeing the premium get lowered so dramatically. So that caused a lot of folks to kind of bleed out some of their value. But I think there's still a chance that it could potentially recover, especially have like 1 year or more options. So in terms of like retirement like planning, it's gonna be really tight, because I'm assuming that like I'll be able to, over the long haul, over like decades, I'll still be able to maintain like anywhere between like a 20 to 25% annual return. And I know like for some people like they're like 20-25%, that's so low, but don't forget 2020 was like a really extremely rare year for options traders. And then also, well, I guess like just for trading in general, I know a lot of people are making some good money, but you have to kind of like temper your expectations, especially like when the long-term average is like, depending on who you ask, is between 7 and 10%. And then for options traders, you could probably double that amount, depending on how much premium that you're able to sell, and then also like how opportunistic that you are. So you want to be careful with that. But let's just say like you can maintain like 20 to 25%, and then kind of work backwards to like how much money that you need each year to for whatever that you want to do. Like maybe you just want to wrap up like your mortgage, or like you want to spend more time with your family, or like you want to travel more like me. So like if you have like only like $100,000 like account, or I guess like the minimum for like a portfolio margin is like 150. So like just to be safe, you want to bump it up to like 200 just in case. Like 20% of that is it's 40,000. I guess like if you live in like more lower cost countries, it could be doable. But like for myself, like I would prefer to have like more of like an original account size, just so like one, you can diversify a little bit more, because I want to have like more, I guess like more maybe like rent out like a like a short-term rental place, and like maybe like a vacation kind of like area. I know like some people like going to Mexico because one, it's I think it's still relatively open, and then also like if you're on the beach, like you're not gonna have as much like, hopefully as much contact, so that could be an idea. So I think just like on just living on like options trading alone, it's gonna be, depending on your account size, it's gonna be kind of rough. So you have to kind of budget like 20 to 25% potential gains. Again, this is not financial advice or anything. This is just what I'm kind of thinking out loud for myself. And then like hopefully you guys can kind of like benefit from it too, to kind of like plan out like what you want. Because remember, like when you're short options, or maybe, or if you're selling options like for a living, like the tasty trade mechanics, like you're supposed to like kind of like expect like 50% of like the premium that you collect. So either you have to sell a lot more often, or like you can kind of maybe in like select stocks where like just like high implied volatility, and then kind of like mix and match like your high implied volatility with your low implied volatility names, where you can like, hopefully if you buy like longer dated like call options, and then like sell some calls against it, you turn it into like a diagonal, that could work out for like non-dividend paying stocks. And then for dividend paying stocks, like I'm starting to because of the low implied volatility environment, um like I'm kind of forced to sell like closer to the money, which I don't like because it doesn't give me enough breathing room. But to compensate for that, I've been like cutting down like my position size, because like just in case like something happens in the world and then like it causes like the stock markets to like kind of crash again. I don't want to be like a full size. Like for example, if I originally planned to buy like 300 shares of like a dividend paying stock, like I would maybe cut it down to like two or just like 100 shares. So just like sell one contract, and then if like something happens on the market, then I can kind of like lower my cost basis by selling another put, like hopefully at lower strikes, to kind of get like a good average uh, going. And then like hopefully things will kind of like play out again where you can recover a little bit faster if there's like some kind of intervention from either the Fed or maybe or people buying the dip, whatever. But you can't count on that. So like I'm trying to find like other ways to kind of put like safe money, and it's not that there's not that much out there. I know like for certain digital assets like or like stable coins, you can get like pretty good yield on those if you're experienced. So I'll probably have to like find like a good way to optimize like which like how much percentage that I want in like options trading, and then like maybe some digital assets, some rental income. But if you want to just do solely options trading, I think it could be tough. I think you might want to have like some other stuff in there just in case. That's why I like Wheel of Fortune strategies on dividend paying stocks, because like let's say you do get assigned at like a higher cost than that you want, but at least you have like some like dividends to kind of like, so at least you have like some cash flow coming in, and then they can maybe like help offset some of potential future losses somewhere else. Because like as you head into like more of like a retirement or pre-retirement stage, like you want to have like more steadier sources of income, and then like the longer that you hold like those dividend paying stocks, you can benefit from like long-term capital gains, which are like at right now they're still lower than like short-term capital gains, which is like your ordinary income tax rate. So unfortunately, like some of the tasty trade, like because it's generally like shorter term options, like that'll just be taxed at like your ordinary rate. But if you get assigned on like stocks, you can kind of hold them for longer and like only sell like cover calls when there's enough like volatility, or if it's like going up, and then like you kind of sell your calls like further away. So that's an idea, and then you can use those premiums to offset like your cost basis. So that's what I'm thinking, for the future. Like as I think of like other maybe sources of income, I'm not counting on any like social media income, because I guess I'm not like big enough to do much. Like I was kind of hoping like maybe like affiliate links and like maybe some YouTube income that would be really helpful. But unfortunately, right now like there's nothing. It's like it's actually costing some money. Yeah. So just to wrap up, just like I think if you are going to like try to retire on just options trading alone, I would recommend. Let me not say recommend. Let me say like I think it would be helpful to have like a higher balance, just so you give yourself some wiggle room, and then this way you have like enough money to kind of set aside for like insurance, like medical insurance and life insurance, whatever, and then also have like an emergency fund just in case it doesn't work out like the way that you want. But so I guess that's what I'm kind of like planning for myself, because like there's gonna be like some bad times ahead where you misread the market, and then like you have to kind of budget for losses as well. That's why like people sometimes people get confused when they see like the chase trade way where like, oh well, like if you collect like 50% of like your max premium, that should be good enough. But like you have to remember there's gonna be times when like the market doesn't go your way, or like the market goes past further like your strikes. So that's why you want to kind of like budget for some losses. That's why it's like I think people should kind of like lower their expectations to like maybe like 20 to 25% of like the total premium received, because you have to remember it's like any other insurance company, where you're kind of like the insurance company. Like you have to set aside some money for potential claims or potential losses, and then yeah, I guess that's pretty much it. Like and then maybe it's a good that sorry it's a good idea to have some money like coming out from outside of options trading, um or like maybe you can consider dividend paying stocks directly, or maybe some certain select bonds, and then maybe some digital assets like for further diversification. So yeah, that's what I'm planning, and then I hope to have like more updates on this as like I kind of like figure things out. So thank you for watching. Don't forget to like and subscribe, and I'll see you in the next one. Bye now.